Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Whoa, big yen crash coming off of the recent Bank of Japan hike, which might seem counterintuitive or like it doesn't make sense. We're going to break that down in just a second. But yeah, very historic day for fans of the Japanese central bankers, as it's the first time in 17 years that the Bank of Japan has hiked rates, as they've only been cutting them for the last decade plus, and they've gotten them all the way down to negative territory where they've been for the last few years. We'll cover all of it in just a second, but let's start with the Japanese yen price action, because you might expect, this is a show of strength for the Japanese economy. It's hawkish central bank, it's contractionary, all those words that might lend to an appreciation in the Japanese currency. And you did not get that. Dollar yen blowing out 150 once again and moving to recent highs. And we'll break down in just a second how high these prices near 151 are. But just in terms of the short-term price action, you can see a couple of things, which is a lot of days higher in a row there for that dollar versus that yen, but also a low to high move of more than 300 pips here for this dollar yen that's nearing 30-year highs, or what would be lows, for the Japanese yen. And no coincidence, I think, that this is occurring on the same session where the Bank of Japan did hike interest rates. And let's actually break down that interest rate hike piece right now, because again, on the face of it, you might think, oh, a hike. Well, when the U.S. was hiking its interest rates to 2%, to 3%, to 4%, to 5%, the U.S. dollar was strengthening to a very historic degree amid all of those hikes. And so now Japan, they're hiking interest rates, so the yen should be strengthening. Well, a lot of context on this one. One, they hiked from negative 10 basis points to 0, not the biggest hike in the world. Two, the central bankers came out and said that, yes, they feel comfortable lifting interest rates from negative territory, but they would need to see substantial growth in the Japanese economy, and they would need to see inflation, be a lot higher for them to lift much higher than this extent. And so not necessarily a lot of upside to this interest rate past 0%. And then three, you bring in the fact that this could be deemed a kind of buy the rumors, sell the news type of event, given that there's been rumors of the Bank of Japan hiking from negative territory into positive territory for really the last 3 or 4 months. I think the first rumors came out back in December, and we saw intermittent pieces of Japanese yen strength as those rumors were circulating. And now that they finally have hiked here, the Japanese yen is kind of like, we already priced this in, and now the fact that the Japanese central bankers are saying that they might not go that much further than this is actually now a negative thing for the Japanese yen. So a lot of different pieces factoring into this. Of course, markets are so much more complex than just the headline, Japan hikes interest rates. But let's get some further context on their interest rate. It is a historic time, first time that they're hiking rates since 2007, and the first time that they've gotten out of negative territory since 2016. But, keep in mind that the U.S. and most major global economies, amid some of the slowing economic cycles that we've seen either before the pandemic, but also then at the outset of the pandemic, most global major economies, their central banks didn't go negative. And so Japan here hiking back to 0%, while it's, a movement in the right direction for Japanese yen fans, and you got to get out of negative before you can start to go positive, sure. It's really not much to make up the ground between Japan and the US or the UK or the Euro area, and we'll cover that in just a second. But I do want to bring back in the dollar-yen price action just to show, one, you can see that in the last handful of months, there's been some dollar weakness, Japanese yen strength, and some of that came amid, like I say, the rumors that, oh, Japan is finally going to hike and maybe they'll start hiking while the U.S. might start cutting. And the market has kind of done away with that as the U.S. dollar has bounced back and is now, trading near 150.90, essentially close to 151. And 30-year highs for this market, lows for Japanese yen, are right there at 151.70. Again, no coincidence that this yen is falling near those 30-year lows after this Bank of Japan meeting, as I think the market was maybe expecting that they might come out a little bit firmer, either with the interest rate hike. Maybe they thought the interest rate hike would have been bigger, or they might come out with more hawkish language to the degree of, we just got out of negative and now we're looking to get to positive 0.5 and 1% and beyond. Because you look at the global landscape here and you see that there's a pretty wide gap. Even if the U.S. interest rates start moving lower, like they've been projected to here in 2024, Japan just went from negative 10 basis points to 0, and the U.S. is at 5.5%. The UK is at 5.25%. Canada's at 5%. Euro area's at 4.5%. Australia is in the mid-4 handle as well. And so if there's not a lot of confidence from the BOJ members for further rate hikes, and the U.S. Economy, you've seen recently with inflation numbers and GDP numbers and employment data as well, still staying strong. If they're not going to maybe cut U.S. interest rates as much as what was thought a couple of months ago, then that gap might still stay near 5% when all's said and done in 2024, which might still lead to a strong U.S. dollar. So historic day, first cut in more than a decade from the Bank of Japan, but Japanese yen moving back down towards its lows after this event is viewed as maybe more dovish than expected. We'll watch for future central bank activity from not only Japan, but the U.S., Euro area. A lot of central bankers set to talk soon. And the next Bank of Japan meeting will be in a little bit more than a month. Until then, thanks for watching.